Yo, what's up, people? So this is your boy Mr. FX again. So I said that I was going to update on these setups to update the entry because I've seen the comments and most of you asking me to explain uh, the reason of trading this area and also the entry model I happen to use. Now, when you look at this pair, this crude oil, all right? So I'll just go a little bit back to a higher time frame to show you something. Now, this is the daily time frame. The daily time frame, as you can see, I was trading the crude oil actually on a bigger time frame, which is the weekly and the monthly. Like this is a weekly time frame. I'm waiting for crude oil to do what? To let me go to a monthly time frame. It's been bearish. You see, I have a change of character, and I was waiting for this low, which is an inducement, to be taken out. So I want to see it coming down here, then I'll get a continuation to the upside. So whatever I was trading here is just the continuation until I take out this inducement here, this area. So I'll just go to very quick to a weekly time frame, and on the weekly time frame, as we can see, very quick, the price is breaking the structure like that, the downside. All right. So now look, when I was looking at this, I'm just looking for a drop until I take out this what we call the liquidity, or this will call it the the inducement level, the monthly inducement level. And when I go to daily time frame again, you can see the structure, the market has been taking out the inducement like that, break the structure, all right, take out the inducement like that, break the structure. So the market is still bearish, and I was just trading a pullback to a certain level. Let me go to a 4 hours time frame, very quick, very quick. Here is where I was now on the 4 hours time frame. We can see we have broken, we never broke this structure, but there was a sweep of liquidity here around this area. Sorry, around this area, there's a sweep of liquidity here. So what is this? The structure went down, so the liquidity. So I was expecting the market to go back in that supply, then I can get a proper drop. So whatever I was trading here is just a pullback towards the supply zone, then to trade the continuation. I rarely trade the pullbacks, and it's been a while, man. It's been a while since I was so serious in technicals, but then I used to trade continuation most of the time. So this one is an internal structure, which is a level that is, when you look at this structure, this is just what we call the internal pullback, and the market will do the same, break the structure high, low, high, low, high, low towards that level, then you get a major drop. So let's go to a time frame that I used. I used the 15 minutes, and I'll start from where we had the sweep of liquidity here, and the lowest low here. This is where we are right now, guys. As you can see, today I'm using my PC I'm not recording with my phone, so I'm using the PC. I don't know if I'm audible enough, if I'm going to have a valid, what you call the valid I sound like the mic. I don't know if it's okay. But as we can see here, this is a shift in structure, the change of character. The market has to take out always the inducement. And about the inducement video, I'll try to make a video about that very soon. Now, market came down, took out the inducement and broke the structure. This was my high. I'll point out. This was my low here. This is my high because the price took out the liquidity level there. Again, when you break the structure, this cannot be my high because why? I don't have inducement there. Let me try to zoom in. I think let me work with the zoom, a very clean chart. So here, when you look at this structure, after price broke this structure here, we never got any inducement liquidity here. But remember, when you see something like this, yeah, let me teach you something about here. So in the liquidity, let's say that the price, the structure is like this. Where's that tool? Okay, here. If the market was bearish, take out the inducement, drop again like that, and it happened to sweep this liquidity, all right, this low, and the price goes back up. When it comes back here, as long as that low is taken out, you don't need the inducement here. You can enter on this what we call the order flow, right? You can enter on this order flow. You can enter on this order flow. But this order flow, of course, you have to narrow down to a lower time frame so that you can be able to find a good entry model, a good confirmation that you like using. So if the market comes back in this order flow, can go up, but when it breaks the structure and it comes back here, you can't go direct on this order flow. You need the inducement. You need the price to go up, take out this low, then mitigate your order flow there, then narrow down to a lower time frame. Look for a continuation. So always make sure that you identify these liquidity areas. You need to understand where's your order flow, where is your, how do you call this? Where's your order flow? Where's your liquidity areas? When you monitor these areas, when they're taken out, you'll easily be able to see the market structure, and you can easily use the chance there to take advantage of what you are doing on the chart. So let me delete this once. So I hope you understand what I was trying to explain here. Like here, we see this is a change of character. When the price goes up, it leaves you with this what order flow here. When it leaves you with an order flow, okay, this price kind of created a new inducement, came down, look at the inducement and went higher. But to look at this structure here, you can see after taking out this low, you have this order flow here. When you have this order flow, you don't need the inducement. You can just narrow down to a lower time frame and look for confirmation. And you can see mostly you can look for confirmation within this fair value gap. All right, you can look at for confirmation within that fair value gap. Now, once the market has gone up, you can see once you have an order flow here, this order flow, the price does not easily come back. You need to have an inducement. So you identify an inducement. Where's the inducement? According to this structure, we can see this was a low that was swept as an inducement, and the price, once it takes out the inducement like that, you could go down to a lower time frame around here, and you look for a long position. Right, I'll try to make a video about that kind of model, that entry model. So after inducement is taken out, this is your, how do you call this? This is your, the inducement taken out, this becomes a major high. Super of liquidity, you can use this shadow, go to this shadow on a lower time frame, find a demand. We always have a decisional and extreme, find a demand zone, then take your entry there. Now, once we break the structure to the upside, look at this. We break the structure to the upside. Where's your order flow? Your order flow, all of this is your order flow, but it's huge. So you need to know how to understand how to use an order flow. But you can see when the market swept this high there, that was a sign. Every time we have a super liquidity either above, when you see a super liquidity, you go on this area. This is a sign that the market doesn't want to go up. Go there on a lower time frame and look for an entry there, and you target either this low or this low. Try to make a video about that as well. So it's been a while, man. Like I was so much focusing on fundamentals, so it's about time we go back and review our technicals again. So you can see when you sweep this liquidity as well, anywhere you have a sweep of liquidity, you can go back to 1 minute time frame. This area, you will find a model there. Now, after sweep of this liquidity, if you're not comfortable, you can use what we call a single candle order block, something like that. Price will come back, you enter there, but this is not the purpose of this video. The purpose of this video, I was just trying to give you a top-down analysis from the pullback continuation point of view. So the price has been breaking the structure to the upside. Once it breaks the structure to the upside, we can see that here, this was your order flow again from this high. This low, that's a huge order flow. But if you go with what we have right now, you can see the first refined order flow is from this high to this low. Price came back here, it mitigated with this area and went higher. So when it comes back here, what does it mean? Since it has broken the high, you need inducement. Inducement taken out. We have another confirmation here. There's a sweep of even this previous low here. As I've said, any sweep, when you get a sweep of liquidity, you can narrow down to that area and find an entry model. Now, let's proceed from here. So we are here. This video, we are coming here to this area. So what was going on here? Because I was waiting. Remember, I was having two areas. When I was explaining on the video, I said that I wanted to come here as well, trade around this area. But the reason I had to stick with this area is because of the market structure. Let's look at the market structure just 1 minute. When the price is bullish, right? Break the structure. Of course, it's a normal break of structure, but for a valid high and low, wait until you take out the previous low, then let the market create a new inducement and go up, right? When you get a structure like this, remember when you're trading, mostly when you see any high or low, somebody will trade here and they'll put the stop loss there. So what does it mean? These are an area of liquidity. Wait for that area to be taken out, right? Wait for that area to be taken out. When that area is taken out, this becomes a valid high. Now, when the price breaks the structure, right? When the price breaks the structure, wait When you break the structure, this means that you have what we call an inducement here. Somebody took a position here. Remember, the market moves, somebody's buying, somebody's selling. So somebody took up a position here, and what does it mean? Their stop loss was just here. We'll call that level liquidity area. So you'll always see that when you have a sweep of liquidity, any area left, all right, any area left there, when you have a demand, depending, and this happens to all time frames, when the market comes back there, of course, when you see this liquidity area, you'll always have a demand zone here. Yeah, you'll always have a demand zone here. So the price will always react as if it's gonna buy, then it will violate, go to this area, gives you a confirmation, all right, and it goes up. So you need to also to understand that these areas, equal levels, they are not good to trade on those levels. I don't know how double tops and double bottoms patterns, how they handle those areas with confidence. But those are the areas the market reacts most of the time and breaks the level. So the price will react and eventually it will drop here, go up, give you a change of character, inducement, returns to extreme, and it goes up. So that's how you identify what you call the internal liquidity, something like that. When you identify something like that and always just below you, you'll always have an extreme level. So here there's a model. Now when it comes to this, I have three types of model, type 1, type 2, and type 3. So you'll see this model, all of them sometimes at once, and you might a little bit get confused, but it's better you see them than not to see them. So let's come back to the market. Where are we? Yeah, where was this trade? All right. So when you look at this position, this market, it created a pullback. Remember, I've told you that the pullback, you see a level like this, the market will go up. And when it returns, what does it mean? You'll always have, on that inducement, you'll always have a demand zone. When you have that demand zone, the price will fail and react as if you are late. So it puts you into that inducement. You want to buy, and later on, it drops and take you out again. So consider understanding those inducement levels, avoid them. If you look at my structures, I'm having inducements everywhere. And on your level of inducement, there's always a demand zone. The price will react and again fail the downside. So you can see this slow. Why did I choose this slow as my point of interest? Let me zoom in a little bit, very quick. Today I want to save on time. Don't want to take a lot of your time. You can see this was a sweep. These are sweep. And again, you can see here, we have to be specific, work with the best way. I like looking at this shadow. Like working with this shadow. Guys, I apologize. My TikTok channel got suspended. So if just they join the Telegram, there's a new backup TikTok account there. You can follow me there. I'll use that account to trade live again. So you see, when I get a shadow like this, when I go to a lower time frame, this is an order block. Let me show you. Let's just jump to 5 minutes and look at that area. Go to 5 minutes and look at that area. Now, let's avoid this. Go to 5 minutes. You'll always have an order block. You see, these are this is still a week, but you see this an order block. This is an order block. If you look at it, this is an order block. Let's go to like 3 minutes. I want you to see that order block. There's always an order block there on your lower time frame. Do you see that? You can see on 3 minutes, can you see that candle? That's an OB. So you'll always see it and it is a sweep of liquidity, a very nice one. Now, let's go back to 15. We do something now very quick. 15 minutes. This is our area, right? This is our area that I had identified as an order block. So let me show you one reason. One thing here. On your particular time frame you're using, the entry model that you'll always see, this can be your demand zone. Let's say that the price was like that, yeah, did something like this and went up, came down, took out the inducement, went high. Sorry, do this this one here. Let's say that price was bearish, tapped here, went up, created an inducement and went higher. So price will come to take out the inducement, and this is how it comes down like that, and it taps here. All right. So this is your inducement level, liquidity, right? So when you have that level, this is your high. Of course, this is your low. So you don't want to see this low being broken. The market has a right to violate or to cause damage with the wick, but it should not close below it. So when the price comes back here on this area, okay, in this area, you go to your lower time frame on that area and you find an entry model. Let's say that this is your area and this is your lower time frame. This is like this now, this is the area we are talking about on a lower time frame. When the market approaches that zone, that it will follow the same rules, take out the inducement, the structure, take out the inducement, the structure, and take out the inducement, and it taps to your level of entry. When it taps to that point, what do? What you're supposed to do is that wait for the market to break the high, change of character, let it react, because remember this is an order flow. Price will bounce on the order flow and go up. So here you're going to see what we call a flip. We'll make a video about a flip, by the way. A flip demand, which turns into a flip supply that turns into a demand zone. But that's a deal, something for another day. I'm showing you the entry model type 1. So a break of structure there, inducement being created here. Remember, when this level is high time frame of interest, let the market come down. When it comes down here, you'll always have a demand zone there, and you look for a continuation to the upside. So you're going to have something like this, inducement, just call that liquidity, and this high that caused the low to your level of interest, a high time frame point of interest, when it's broken, it's called a change of character. That's when you get the first shift. And on the lower time frame, this is your lower low, lower high, lower low, lower high. And what is this? This is what we call a break of structure here. Boss and boss here. Man, it's been long since we did this. And lastly, this is the last break we are getting. So when you get the market to change of character, you're getting what you call a shift there. So here there's two entry models that happens. This is the liquidity level. You want to wait for it to be taken out. So here you're going to get what you call a flip. I see a flip here. You're going to see a breaker block is here. You're going to see what we call order flow. All right. So there's so many things that happens here. But it depends how the structure presents itself. If this low is just a sweep of a candle, something like this, like you just have a candle here, candle sweep, all right? Then I can just enter on a fair value gap. But when I have a structure ending with the body to the downside, then I'll have to wait for an extreme order block. If I get myself tapping on that area, which we call, I don't have that level here. My other trading view version has the settings. This one is just a different one for analysis. So you see the price comes back here. If it comes back here, remember when inducement was taken out, this is your high, and that's when you enter your position around here. And this, when you put your position here, sorry, what is this? How small is this thing? What is this? Okay. You enter there. The stop loss will always below this demand here, and that's how you target the trade. So within this model, there's some 3 things that have happened, but I'm only explaining model type 1. So when you see this, that's when you enter. So this should be here. Instead of you taking a direct trade on a bigger demand like this one, something like this, and you put a stop loss here and the target in that level, you see you'll have a bigger stop loss. So this is an entry model, but this one, most of the time, it will fail. If the price is intended to go through it, you'll not know to take you out. But when you have a model like this and you get taken out, it makes more sense because you waited for more confirmation. So this is the entry model that I wanted you to understand. And let's come back to this market. Here, we try to see it. The market came here. So there's other factors, as I've told you, that the market has a room to damage the structure. Okay, my mic was muted. I hope I'm back. So the market has, you see, this was my demand, but what are we seeing here? If I remove this, you're going to see we had what we call the candle damage, took out that low. Because remember, I've told you that every low or the high where the market moves, somebody was trading. So this low is taken out because somebody took a buy position here to the upside. So this low was to be cleared. So when it was cleared, I came on the lower time frame. I like dropping first on 5 minutes, looking at the structure. You can see when I look at this structure here, You can see what I used the 5 minutes to enter this trade. 5 minutes. What are we seeing here? If I do this zoom in a little bit, we're going to see what we call after the sweep of liquidity here. After the sweep of liquidity, what is the structure here? The market was coming down like that. This a high, then created the low, then took out the first high, all right, the first high here. If you watch my video, there's how I explain a pullback. Oh, that one is sorry, it's not its own private community. Price goes up, it has to take out the liquidity and take me back to a demand zone. Then that's how you take a buy position there. So what I'm saying is this. This is what I was saying. The high time frame point of interest tapped, correct the structure, change of character. You have what you call inducement. Then always down there, you'll always have a demand zone. Price stops there, goes up. But this was on 5 minutes, of which I was kind of seeing 3 models there at the same time. So, but you can see this is my demand zone here. And this is, you see, I'm having a breaker. That's I've told you that you'll see many models. Let me drop on a lower time frame and just explain the one that I intended to show you. The one is here. Let's talk of this. We're good here. We're good. We are here. You can see it's very clear. This is a sweep of the previous major structure. To the sweep, we're getting the major high being broken. Of course, this is a change of character. It's a valid change of character. Yeah, according to 1 minute. I'm on 1 minute. This is your change of character here. This is the first high causing the low. Shift. When you get this change of character, what happens? Price goes up and creates what we call an inducement. Look at that. The inducement, you must be able to find a valid pullback. Then when the price starts coming back down, we have 3 things that happens here at the same time. I had a breaker block, or what we call the flip, a supply turning into a demand, and you can see what is happening here. The price came, reacted on it, but below me, the valid way I was having this demand zone here. So I remove the flip just to confuse you there. Now you see the valid, the type of entry I'm explaining to you. You see, I entered there, but I had to put my stop loss down because I saw 3 model there. Just come back here. So you can see when you look at this area, you are seeing what you call a change of character. Price goes away, creates a pullback, which is an inducement level whereby it pretends as if it's going to leave you, go up with the momentum, then just to enter, then start coming down, down, down as it slows down, taps to this area, and that's how it left. Can you see? That's how it left to the upside. So I've told you that everywhere you'll see an inducement, you'll always have what? A demand. So you have to watch over that. So you see price came back here, mitigated the level, and that's how it's been pushing to the upside. So I hope, guys, this video was helpful to you. And if you like to join our community, I think it's been a while since I did some mentorship on technicals. I think most people we have are only advanced guys who don't have a current class. So this December, of course, this December, we don't trade mostly on December. So you guys, if you want to learn some skill about technicals, smart money concept, and all these levels, maybe consider joining our community if you are willing. It's optional, but on December, it's a month to use to learn. So you are welcome, and always reach out. Okay, you guys make sure that you subscribe. This video will be also on YouTube. Make sure that you subscribe on the YouTube channel, and I'll leave my contact in the comment section. Oh, hope I'll see you around, guys. Have a good weekend. See you on Monday. Monday looks good, and I'll make a video as well. Make sure that you watch the video that I'm going to make on updates on Monday, the weekly forecast webinar. Yeah, sure. So that is it. So you can see in short, before that, in short, this was a